Forget about all of the noise. It's the best performing asset in all recorded history. Mm-hmm. Right? It does 140% a year returns, and that's including 3 or 4 80% drawdowns. Right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods. Much like AI was a gift from the gods. We've been given something that can unfuck your future, which is the whole thesis that I've been talking about. Mm-hmm. So do that. And so it's not about liking, it's not about the culty thing, it's not about any of it. It's like, if I've got 6 years and I want to make as much money as possible, I want to own the best risk-adjusted reward asset I can. And technology is the second one. We're still in summer. So basically, if you think late summer, the weather's pretty good. That's where we are. Somewhere in the middle of summer. So the weather's good. It's easy to make money. And this is the acceleration that happens around the US election years. And this has happened every time is what I refer to as the banana zone, where everything goes bananas. And in crypto terms, the charts just look like bananas standing on end because they just go vertical. Because
the next Bitcoin surge might eclipse the 2016 rally, growing up to 10 times larger, according to Raoul Pal, CEO of Real Vision Finance. In a recent interview, Pal described the upcoming Bitcoin boom as an unprecedented event that will make previous rallies seem small. He highlighted that Bitcoin's rise has not been due to luck. Over the years, it has consistently delivered staggering returns, averaging a 140% annual increase. At a time when most investments struggle to match inflation, Bitcoin is distinguishing itself as a groundbreaking financial asset. Make sure to watch to the end of this video where Raoul explains why this could be the biggest bull run of all time. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Raoul Pal.
Macro summer's when the economic machine starts firing up again. And that lends to another acceleration in markets and growth, whilst inflation tends to be falling or subdued. And that's a really lovely period because you can make money in pretty much everything. Commodities go up, gold goes up, small caps go up, crypto goes up, tech goes up, everything goes up. And that's where we are now. And so that summer period, the real footprint usually accelerates around the US election and after it. And that's when most markets have their best performance. So there is a seasonality around elections, which you tend to get a strong first half of the year or first part of the year. Then it tends to be a bit more sideways, which we had in tech and we had in crypto, and where the rest of the market started playing a bit of catch up. And then you get the acceleration that goes on for the end of summer straight into macro fall, which is 2025, when really the best gains come of all. So that's where we are. So back then we were just starting. Now what happened? Crypto went on a massive tear, then had that sideways consolidation. Tech had a massive tear, had a sideways consolidation. The rest of the market's now catching up. And the next phase is the money shot. We're still in summer. So basically, if you think late summer, the weather's pretty good. That's where we are. Somewhere in the middle of summer. So the weather's good. It's easy to make money. And this is the acceleration that happens around the US election years. And this has happened every time is what I refer to as the banana zone, where everything goes bananas. And in crypto terms, the charts just look like bananas standing on end because they just go vertical. Because around the election period and the year afterwards, they all have to refinance, $10 trillion of debt. The Fed has not been able to the Treasury's not been able to refinance easily. So it's been issuing short end bills, which is basically a holding pattern for rates to come down. Wait for rates to come down and then you can refinance your rates. It's like you don't want to refinance your mortgage at highs. You want to refinance your mortgage at lows. So you keep your money in a money market fund, which is basically what the Fed did. And then they'll do that. So that period of massive liquidity tends to debase currency. We're seeing China coming out with the cowbell, more stimulus. The US has started the rate cut cycle. That's going to come down a lot. The EU have started, the UK have started, everybody started. And so the big game is at play. So generally speaking, as I said, crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la land returns. But that's crypto. Crypto gives that kind of opportunity. The Nasdaq's been following this perfectly. So it just keeps going, whether we get another 20%, 50% upside in the Nasdaq, or it could be more. We don't know. You can't really tell. But the point being is the gains are huge. We'll also see commodities picking up. We'll also see, we've seen precious metals picking up. We'll see all parts of the economy and the stocks picking up as the economy's growing. Inflation's not yet a problem. And the central banks are cutting rates and adding liquidity to finance their debts. That's utopia. That's what macro summer and macro fall. It's basically market utopia. Rate cuts are actually a bit of a red herring. Liquidity really comes from central banks and governments putting money into the system. So we have something in the US called Fed net liquidity. So what is the three component parts of that state level liquidity? Well, that's driven by the Fed balance sheet, quantitative easing. They're still tightening, but they've reduced the amount of tightening. Then we have the reverse repo. And that is basically where banks mop up all of their funds. So if that's very big, money's tight. And when they start taking the money out, it goes into the banking system. The other side is the Treasury General Account, which is the checking account of the government. Now, if they've got a lot of savings and they're not spending it, which is where we are today, then conditions are tight. But once they start writing checks, what happens is that money floods into the system. And that is a kind of a net increase in money into the system. So if you make more of something and it's in abundance, its purchasing power or its value declines. So it's not that necessarily you and I get to borrow money more easily. It's not that. It's that there's more money around and it debases currency. It's like this magical thing that happens. Now, on the private sector side, the stuff like M2 growth and private sector credit growth is kind of a function of that, but they both work together because you can create dollars in a Eurodollar system. You can just create them out of thin air by being a bank. And so what happens is there is this huge increase in money that happens. But we as people don't generally get it. Sure, your mortgage rate may fall a bit, but really it's this debasement effect that happens that's more insidious that we don't see and don't really understand. Asset prices take off, but our earnings don't. So therefore we get poorer in terms of the assets we can buy. And an asset is just future deferred consumption. If you buy gold today, your expectation is you can sell it in the future at a higher price to protect your purchasing power. But today you can buy less gold than you could a month ago and less gold than you could 5 years ago, and because your wages don't go up in the same as these scarce assets that move because of debasement.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.